Good afternoon, everyone, and thanks so much for joining us for our growth strategy session. It's going to be covering moving money across cross-border rails in Latin America. As you can see, we had that clock up there, and the reason for that is because with Zoom webinars, sometimes it takes a little bit for people to be ushered into the room. So we sort of set aside a couple of minutes at the beginning to make sure that everyone can get in and they're not delayed, and we can sort of start the presentation for everyone at the same time, more or less. So I'm Abel Delgado. I am Digital Marketing Director for PCMI. I'm going to be serving as the moderator for today's webinar. And basically, just to give you the rundown of how it'll be, we have a presentation that lasts about 50 minutes, and we set aside about 10 minutes for questions towards the end, where you can ask as many questions as you like. You can actually pose the questions whenever you want during the webinar. So if you look on your panelist panel there, you'll be able to see that you'll an icon that says Q&A. So if you click on that icon that says Q&A, it'll bring up the window. You write in your question. So whenever the mood strikes you, by all means, fire off the questions, and then we'll get to them towards the end. So as everything goes, feel free to ask at any point in time. We'll also be asking you a couple of questions, poll questions, essentially. So they'll come up and we'll announce them because we like to get your feedback on a lot of these different things. All right, so let's move on to our legal notice here. I'm not going to read it word for word. The basic thing to understand is that we've tried to verify the accuracy of the data as much as possible, but we do not, under any circumstances, accept responsibility for inaccuracies, et cetera, et cetera. We encourage you to read that at your leisure, but I'd rather focus really on the content of what we're going to be presenting here today. So let's move on to our next slide so you can see who our speakers will be. We have Lindsay Lear-Tutson here. She is our managing director here at PCMI. Also joining us is Marina Gil, who is our senior consultant out of Brazil. And finally, Mihail Popov, who is our senior analyst here at PCMI. So they're going to be the speakers guiding you through everything here. Now, I'd like to turn the floor over to Lindsay to walk us through a little bit more information about PCMI and our focus. Lindsay.
Thanks, Abel. Hi, everyone. It's great to be here today. Most of you know PCMI, and we're here to be delivering something a little bit special and unique to you today. We are the world's #1 knowledge partner for operators in the global payments industry. And most of you know us as particularly expert in Latin America. We're going to be diving into the dynamics of this industry in Latin America. But the principles and frameworks we'll be going through today are applicable to anyone globally operating on a global scale. So do keep that in mind if you're operating outside of Latin America. If we go to the next slide, at PCMI, what we essentially do for our clients is provide analytical solutions that help you grow, measure, and protect your business, right? Based on primary research with real humans, insights you cannot get from AI and you cannot get from public research, from existing sources. And we apply that to trusted and proven frameworks. We're going to be exploring some of those frameworks today and giving you some insights out of hundreds of conversations we have with cross-border payment practitioners all around the industry. Okay? So just with that brief intro, I'm going to actually turn it over to Marina, who will take us through the first part of our webinar today with a focus on P2P, trying to understand what are the strategic levers in the P2P business today in the particular context that we're operating in. So I'll turn it over to Marina.
Thank you, Lindsay. Hello, everyone. As they mentioned, I'm Marina Gil. I've been working with PCMI for the last 6 years. I'm based in Brazilian, and I'm very excited to be here with all of you today. Thank you for joining us. I hope this will be a very valuable session to all of us. So let's get started to the next slide. So as Lindsay just mentioned, most part of our work here at PCMI is to help our clients to grow, measure, and protect their business, right? So I'm pretty sure that everybody, almost everybody here today wants to know how to grow their cross-border business, correct? So let's start from the basic, right? How can we grow a P2P remittance business? Here I'm talking about cross-border for P2P, and then we're going for the B2B section, okay? So everything I mentioned here is individuals, is P2P remittances. And regardless of where you are, which country you're operating, there are 3 ways you can grow your business, your P2P remittance business, right? So here we have a funnel, and I'm going to touch the three areas you can focus to grow the business. So the first one is the top of the funnel here, and this means more senders, meaning acquire more clients, individuals sending remittances, right? You can also do that by increasing the frequency they send transactions or the volumes of their transactions, even reduce churn, okay? So this is like the top of the funnel, acquiring clients, right? Increasing your volumes. Then towards the middle, you have the other area, which is drive the value through the existing customer base. This is more connected to retention, to enable more features such as new corridors, new rails, enable use cases, providing more services to what you already have, right? To generate this retention and loyalty. And then towards the bottom, you have the life cycle, what we are calling here life cycle and ecosystem expansion. This is more related to cross-sell. You're moving and offering other different financial services to your clients, not only focusing on the remittances here, and monetizing your client base. Okay, so this is the three main areas for you to grow the business, and they can operate differently in different scenarios, right? And how we select that. Okay, so if you go to the next slide, one thing that is very interesting is to understand the context you're operating in, the landscape of the market you operate, right? So for example, currently, the biggest news, right? The main context we have is this new tax on outbound cash remittances that went in effect on January 1st, 2026 in the US, which means that all cash remittances, now you have to pay a 1% tax. So for example, if you go to Western Union for a remittance in cash, you're going to be requested to pay this 1%, right? This is very new, but everyone operating in the markets already has eyes on that, because we don't have official data yet, but it caused a lot of rumor and a lot of expectations in the industry, trying to understand what will be the impact of this new measure on the growth of the remittance business, right? Especially here talking about we Americans, right? So if you go and check the data on the next slide, we are going to see that we have already some impacts and some forecasts to show how this would impact the growth of the remittance business in US, the outbound remittance business. This market today values 90 billion in outbound, meaning remittances from the US to the world, which is a big market, right? And if we see what the data and the forecasting says, we have here three scenarios to show you how it's important to understand the context and any change that may happen in the landscape towards the projections, right? So if you see here the first line, the red line, it is the forecast considering no change in the immigration policy, because, sorry, I forgot, this tax is together with the immigration policies that Trump is being announced. They can change a lot how the remittance market will grow. So considering no change in the immigration has occurred and no change in the tax, this market was forecasted to grow 5% in the next years, right? But then if you go to the darker red, what you see is like considering the immigration policy, which will reduce the number of immigrants and new immigrants, right? But no tax applicable, the market was forecasted to grow 2%. But now we have here the green one, considering the immigration policy, the reduction of the immigrants, right? And this 1% tax on the cash remittances. This brings the forecast to 1% annual growth in the next years, which means this is a stagnated market, right? Flat market. And this is a completely different scenario from markets that are growing with organic growth. So the question is how we define the best growth strategy in a market that we now know, checking this data, that is stagnating. Okay, so if you go to the next slide, the idea here is to show, now that we already know, all of us, the three areas we can grow, and that we are operating in a mature market, right? What is the best strategy? So here we brought back the green line just to show the stagnation of the market, right? And on top of that, we brought the funnel with the areas. And as you may see, the top of the funnel strategy, which is acquiring more senders, more clients, are not feasible or not the correct strategy for an stagnated market, right? But on the other hand, you should focus on the middle and the bottom of the pyramid, meaning clients, adding more use cases, adding more rails, and especially driving the cross-border. Okay, this is where an industry with a 1% annually growth, flat you should focus in order to grow, right? And this is if you go to the next slide, it's like kind of interesting, right? Because despite all I'm saying here and being the more competitive and with the lower profitability, most of the competitors coming to the US for the remittance, they go for the first strategy to acquire new clients, right? We approach it like on a daily basis almost by fintechs, banks, credit unions, all kind of companies that wants to operate in the US P2P remittance, and also the ones that are already operating in this market. They want to know how to increase their customer base, how to acquire more senders, right? And I have to say this is the wrong move, right? Because if you are in a flat market, stagnated market, and you want to grow, capturing new clients means there is no new clients, so it's a battle. You have to compete with other players. It's like to bargain and to win this client. So it's a war, and you have to offer better digital user experience. You have to add more features. You have also what we are calling here buying users, meaning promote incentives so they can use your platforms and really leverage your marketing. And all of that is very expensive, right? So you have to invest a lot. And the why it's not the best strategy is because you're going to invest, you're in this crowded environment, but this will not drive long-term loyalty or retention of the clients, right? And even worse, the return on these investments, they have a limit, right? So this is why we're telling this should not be the strategy, and this is the wrong move. Although again, it's the preferred one, it's like the default strategy for players wanting to grow in the P2P remittance in US. Okay, so what should we do, right? This is the wrong one. What is the right path? So in the next slide, what we want to show, it's like we have like 4 areas that we want to explore here. So we are in a very crowded, competitive, stagnated environment. What should we do to grow? As in all other industry, in this scenario, we have to think long-term, right? So what should we be doing long-term? What are the long-term bets that we should focus on to really grow in such market? And here we have the four possibilities that we want all of you to be thinking together with us, right? So the first one is like add new corridors, simply adding possibilities of paying or sending remittances to other countries, okay? The other one is like add new rails, such as stablecoins or other ways of sending the payment. This could serve existing clients, could be valuable for existing clients, can also acquire new clients, right? And then the other way is like add new use cases. So you have your clients, and now you want to go to expand your client base. So you are serving P2P, but now you can go to B2B or even do payouts or even a very niche specific higher tickets such as me-to-me transactions, right? And the other, which is the most long-term option, is the expansion of the ecosystem, meaning you are now starting to offer different banking solutions, lending, banking, even going to domestic payments is like where you're going to do cross-sell. The remittances are not the main or the unique product, but it's a way for you to capture other cross-sell opportunities with the clients, okay? And now for us to think about all of these 4, I want to show you in the next slide a visualization and how I expect to help you guys to understand what are our recommendations as the best option, right? So we need to measure how hard it is and how risky it is, right? And the size of the opportunity. So if you see here in this slide, the idea is like the X shows how hard it is, how difficult it is to move for this growth stream. Sorry, this growth stream, yes. And then we have the risk. More towards the top, the riskier it is. Is it an unfamiliar environment? Does it request a lot of investment? Does it have any compliance issue? Do you need any specific regulation, right? And then, of course, the size of the opportunity, which is the size of the bubbles, okay? So if you see here, the acquire more senders is this very small, tiny bubble on the bottom and on the left, meaning it's the easiest, but the smallest opportunity, okay? But now what we want to call out is what we're calling the sweet spot. The three options, possibilities of growth that we think and we recommend is the best strategy. So first, add new corridors. It's not that difficult. It's not that risky. You know the way. It's like a playbook. You just have to focus on the demand where you know there is demand for this corridor, and you open this new corridor. If you go to the second one, is a little bit more difficult and a little bit more risky, which is add new use cases, going for the B2B, for the B2C, because this is a new client base. You have to invest in branding. You have to be knowledge, trusted partner for this new use case as you are for the one you already operate with. And then to a little bit more risky and more difficult, it's to add new rails, especially if we're talking about stablecoins, which is the hot topic regarding rails currently, because there is a lot of compliance, regulation, and even treasury liquidity issues that needs to be addressed, right? But anyway, all of these three possibilities, they are not that risky, not that difficult, and the size is very interesting. It's not tiny opportunities. So this is why we're calling the sweet spot. And the ecosystem expansion is like the riskier, the most long-term one, because it's really a game changer. It's completely differentiating your offering. But although harder and riskier, it is the biggest volume, the biggest payoff, right? Of course, it's an inverse relationship. So now that we have in mind and the idea of how we should operate in this stagnated market, one thing that called our attention is when you registered for the webinar, we made a question of what we wanted to know more about cross-border. And I bet if you go to the next slide, you're going to see the response. And this is very interesting because the response that was mostly selected is the rail strategy, meaning this is good for us. We are glad with this result because it connects with our thinking and our recommendation. So most of you all wanted to know more about the rail strategy. Okay, and then you have followed by the corridors, the pricing, and if you see growing the sender base is the least one selected, which is totally connected with our recommendation. And it's good for you guys to see this is how your competitors and your peers are thinking. So everyone putting more focus and willing to understand more about the strategy, the rail strategy. And for us, again, Latin American, for us, stablecoins are very relevant. It's Miha will explain better after, but it's really relevant and makes sense that the players operating in this context are interested in better understanding how to leverage this strategy, okay? So just in the next slide to complete this P2P remittance, the remittance part, I want just to bring some best practices about the three sweet spots that we just mentioned, meaning to help you when you go back to your internal teams and you have discussions. This is the sweet spots and the recommended practice, right? So the first one is adding, the first strategy here that we want to call out is to add a new, Abel, if you could go to the slides, new corridors. Yes, the new corridors is what we mean by that. When you define to go to add new corridors, you don't have to invent anything. It's just choose the corridors based on your demand, on the data you have, where you feel there are volumes and need for that. And also the FX spreads, because this will guarantee your profitability since day one, right? And for that, you just use a playbook that you already have, or you develop one that you can keep using. So it's not very difficult, right? The second one is the use cases, to add new use cases. And for that, the main suggestion is you don't have to invent anything. You have to reuse the existing rails and corridors you have. You use the capabilities you already have, and you tie it to your existing client base, right? Try to connect it. What you need is really to invest in branding, because it's a different audience, although connected to the audience you currently serve, right? And the other one is the rails, right? Here is what we mentioned, especially stable coins. But anyway, for the rails, we see it's a hot topic. Everybody want to understand that. But what our message for you is, just focus on know your why you want these new rails, why you need a stable coin rail. Is it to cost reductions? Is it to serve a specific client? Is it for any specific reason? Because what we want to avoid, and we listen a lot from clients approaching us, is like, my board says I need to have stable coins. This is a decision. But this is not what guides any strategy. So be sure to understand why you need that. And by knowing your why and what you want to serve, you're going to be able to add properly and execute this strategy on your rails, right? And one thing that is really relevant is, be sure that your current offering are stable and robust enough while you're testing and doing the other tests to guarantee that your clients are still served. Okay, so basically, this is what I wanted to share with you guys with the P2P. This is stagnated industry with 4 areas, the three areas that we highlighted as the sweet spot and some best practice. Of course, it's a small time. We have short time to explain all, but my goal is really to open your eyes and to provide some guidance to organize your thoughts so you can really have clarity moving from now to the end of the year with your strategies. And I will invite Lindsay to come, turn it to you, Lindsay, to go through the B2B session.
All right. Thank you, Marina. Terrific. I just want to highlight how often we have these conversations with clients, and how the top of mind question is, how do I get more senders? How do I steal senders from competitors? How do I get new senders in the US market? And our idea here is just to expand the thinking a bit more, go beyond that default strategy, as Marina called it, right? So moving into B2B. This is a fascinating part of the industry. As you all know, it's very nascent in certain aspects. And if we go to the next slide here, we're going to follow a similar framework that Marina just walked us through, but from a B2B perspective. We have this same funnel, and the funnel is very similar to P2P payments, right? We have the top of the funnel, the mid funnel, the bottom of the funnel, just a little bit more sophisticated, a little bit more nuanced. In B2B payments, we have more variety of strategic levers we can pull. And in B2B, the ultimate game here is about becoming more embedded, more valuable, and harder to replace, more embedded in my client's financial ecosystem, so that I can really drive a long-term relationship. So at the top of the funnel, same idea. Acquire new clients, increase client wallet share, drive higher transaction value through top-line growth. Mid-funnel is driving value, right? Expanding corridors and currency supported. I'm adding related services that business clients need: FX hedging, invoicing, treasury tools, self-service, portals, etc. Adding new rails, etc. And then at the bottom, it's that life cycle and ecosystem expansion. I'm now cross-selling into other areas of trade finance, of import and export services, platform and integration and analytics. This is where we see heavy use of data and AI to actually drive performance. So very similar, a little bit more depth and nuance in the B2B area, and about embedding ourselves into the operational DNA of the company. Okay. Now, moving on to the next slide. Now, the B2B context, the global B2B context is unbelievably massive, right? In P2P, we saw from the US a $90 billion market. When we consider global B2B, this considers global corridors, and it excludes very large interinstitutional transfers. So this is true B2B commerce, around 45 trillion globally, growing 7 times faster than the P2P market in the US. So 7% year-over-year growth. That's the forecast through 2023. You can see how it breaks down from Latin America, USA, and rest of world. Really, we have this unbelievably massive market, which is dominated, as all of you know, by correspondent banking, by the SWIFT system, but is increasingly becoming digitized, and lots of disruption and new options available for customers looking to move in this market. Now, if we go to the next slide, what this means is the fact that we have a growing market That creates opportunity for organic growth. Okay, I don't need an aggressive strategic intervention to grow in B2B payments. You can see that our full funnel, unlike P2P, where we had that top of the funnel on top of the market curve, we have our full funnel fitting underneath this growth curve for the industry. I can grow organically, I can acquire new senders, I can acquire new customers, maybe I can encroach on competitors, I can attract new businesses coming into cross-border for the first time. I can do middle of the funnel, I can do bottom of the funnel. Everything is available to me. All right. However, that sounds exciting, right? That sounds like, oh, this is where we need to be. If we go to the next slide, the challenge with that is the hidden challenge, and the Achilles heel of this is differentiation in a growing market. Here you guys can see, about 24 logos of companies that are actively pursuing growth in global B2B cross-border payments. The problem here is differentiation. Most of these brands are in the process of migrating from a P2P business into B2B for the first time. It's a complete frontier. We're pioneering. This is unknown territory. And we have this blue ocean of opportunity. What does this actually mean? All of these brands are competing and for a slice of this massive market. And what happens is, many of you probably have experienced this. If you go to 2020, you walk the expo floor, you talk to these different players, and you talk to a salesperson and say, so tell me about give me your pitch, give me your value proposition, and how is it different from these 5 other guys over here who have a similar solution? And the challenge is that very often these salespeople cannot give you a clear, articulate reason as to why you are better or even different from your competitors. Okay, I've seen it dozens and dozens of times. And this is not a marketing failure. And this is not due to lapse in training of salespeople. This is due to a lapse in strategic leadership and direction, and knowing clearly where in this blue market, in this blue ocean, we want to compete. So while P2P, the challenge is, how do I grow in a market that's not growing? In B2B, the challenge is, how do I corner a very specific portion of this market and differentiate in a valuable way from all of these other players who are trying to come after my lunch? Okay. So on the next slide, how do we solve this? Okay. Well, I want to tell you all what most companies do and where the mistakes are being made. Most companies take a product-led approach. Okay. They identify users with underserved needs. They say, okay, here's my feature set. Here's my user experience. I see a match. I can solve some of the pain that these users are experiencing. Overlap the two and you have a product market fit. At a very kind of superficial level, can you see how that basic thought process is going to replicate itself in the same way across dozens and dozens of companies? The result of this is a poor understanding or no understanding of your customers, very little brand differentiation, uninspired and uninspiring salespeople, stalled growth, and ultimately disappointed investors. Okay, this is kind of what we tend to see in the market today. So let's continue. And we have actually, this is the visualization of what most companies need. Okay, not a product-led approach, but a brand then product-led approach. What does this mean? We have this blue ocean of users with underserved needs. So we have users, we have cross-border payment users, right? We have users with underserved needs. Even those with underserved needs is still a massive, vast blue ocean of opportunity. The first step is finding users with switch-worthy underserved needs, meaning their pain in cross-border payments is so severe that it's actually putting their business longevity at risk. Revenue, operations, they cannot operate successfully without a solution, and they're looking for that solution. So that's a slice that we want to focus in on. The second step, before we even think about product, the second step is, okay, where do I have brand equity? What do I mean by that? Where is my brand already strong? Where have I already generated trust? What does my brand mean in the marketplace? Between corridors, institutions, company types, what is the meaning of my brand and what kind of customers does it resonate with? All right. And then secondly, where exactly do I have the right to win? Right? Is my brand more powerful and have more credibility with traditional institutions, or more tech forward, digital first, digital native, even stablecoin native types of institutions? Do I resonate more with small businesses or larger enterprises? Which use cases have I already established the right to win? Okay. You take that brand slice, you overlap it with those switch-worthy underserved need users, and there you have your unique corner of this blue ocean where you can compete. And once you've identified that, then we want you to come in with your product, with your operational value drivers. Okay, selling your product alone doesn't equal growth. You have to sell that product to the right customers at the right time in the right context. So this brand then product-led approach is something that we don't see very often. It's something that is desperately needed to take full advantage of this growth that we're seeing in the market. So what does this look like in a step-by-step way in cross-border payments? All right, so the first step, as I mentioned, is identify users with a switch-worthy pain. Now, if we visualize this, we've got level of pain on the x-axis, and we've got their own ability to implement a new solution on the vertical. And most of you already know this, that micro companies, micro importers or exporters are the ones that are all the way out to the right here. These are they suffer dramatically. They're excluded from correspondent banking. They have a very hard time. They're also the most agile and can most easily adopt a new digital solution. Marketplaces and tech platforms, digital first platforms that have to make fast disbursements all over the world. These are another kind of sweet spot user with a switch-worthy unmet need. Global SMEs making payments in and out, making high-frequency payments, and also in emerging markets, B2B service providers who are receiving high volumes of payments from developed countries, they need fast, easy solutions. Outside of this kind of sweet spot circle, we have large enterprise and we have banks. Not to say that they are not good customers, they're just going to be more difficult to serve and require a little bit more work to identify that particular user within that base that has a switch-worthy unmet need. Okay, so that's the first step. Step number 2 is overlap those switch-worthy customers with where you already have brand equity, right? And this might be according to rail mix, user type, user size, or corridor, right? And the easier ones to find a way to differentiate and easier to implement, of course, are going to be corridor, user size, and user type. Rail mix is a bit more specialized, and if you have that strength and already have that brand equity, that's potentially a very important competitive advantage for you because it's more difficult and it represents a higher level of specialization. But where among these 4 areas do you already have strong brand presence, strong brand meaning, strong brand equity, right? Overlapping the 2 is where you kind of find your ideal location, your little sliver of that blue ocean where you want to compete. If we go on, only then when you have that determined do you start selling based on products and operational value. Now, let me be clear. It doesn't mean that you wait until you've identified that slice to develop technology and develop a user experience. These things are being done a little bit in parallel. But what I want to tell you all is to not lead a go-to-market strategy and a marketing and communication strategy with product. Your product has to match the needs of that sliver of ocean that we identified, and then tweak it and refine it for that specific user base that you've identified. Okay. And then at a final step, you have to, of course, market yourself. And this is where the salespeople at Money 2020 will really benefit from a more powerful vision. Okay, so we want you all to be going to market with what we are calling leadership messaging. This is a framework that we use at PCMI for our own marketing as well as when we do thought leadership for our clients, right? We want you to position yourself as the undisputed leader in your specific market niche. Okay, so this is we call this the 3 A's. All right. First one is control the client's aim. What do we mean by that? Help them speak about where they're going, okay? Don't talk so much about pain. Everyone talks about pain points. Everyone knows what all clients' pain points are. Frankly, it's boring, right? Everyone can probably list the top 5 pain points in cross-border payments. We don't want to talk about pain. We want to talk about ambition. We want to get your clients thinking about what will life look like once I'm using your solution. Once I have a solution that removes the barriers and helps me moving powerfully towards my dreams, towards my goals. We want to control their aim. Secondly, we want to empower agency. Okay? Market leaders do not attract disempowered buyers. What does a disempowered buyer look like? They're not loyal. They're reactive. They're very price sensitive. They're moving all of the time based on whoever has the best offer of the moment because they're unclear on what they really want. An empowered buyer knows where they're going. They know the solution that will get them there, and they will choose the best solution for where they're going. And you, as that market leader, are already present because you've identified the exact customer you need to go after based on those prior 3 steps. So your messaging wants to empower your buyers, not just educate them, but empower them to choose the best and most powerful solution for their problems. And then the third is spark actualization. All right, this is the hero's journey. You want to make your customer feel like you in your marketing. You want to position your customer as the hero in this story, right? You have a challenge. You have a problem, you have a challenge, you have a solution. So you're painting the arc of this story, and that storytelling gets them to take action and actually make that buy decision. Okay, so this is a framework that of course we can help you with, but even if you don't work with us specifically, this is the type of higher level marketing that I want to see from cross-border payments operators who are struggling to differentiate their brand. This is going to put you at a higher level than anyone else who's competing with you. Okay, so that was a quick run through our kind of B2B framework. Again, the main message here is don't lead with your products. Don't lead with product market fit. We need a more deeper and complex analysis here to really figure out where in that blue ocean, where are you going to be the absolute dominant champion where the competition has no ability to even touch you. Okay, and once you have that clear, you will grow much more clearly in a more predictable and a more powerful way. All right. Fabulous. So we've led you through some of our thinking around P2P and B2B. Now we're going to go right to the context of Latin America, and probably a lot of you have questions that we're going to answer in this section. So I'm going to turn this over to Mija, who will walk us through kind of comparing different rails, making some predictions in the region to help us make the smartest bets. So Mija, welcome.
Hi, everyone. Thank you, Lindsay. Okay, I'm Mikhail Popov. I'm senior analyst at PCMI. I'm Argentinian, and I'm based in Barcelona, Spain. So that's a quick intro so you can know me better. But I would like to start talking about a bit of the context in Latin America. So if we move on to the next slide, we will see that here the main question is not which rail will win, but payment, because we already know that payments is already a multi-rail industry. And the real question here is which infrastructure will scale the fastest, right? So here we are looking at 3 options, as you can see. First is wallets with a deep penetration but limit cross-border connectivity. Then we have domestic real-time payments or RTPs, like Pix, Breve, Spay, that are actually very successful locally, but they are still in early stages and they are fragmented, actually, when we talk about cross-border payments, right? And then in third place, we have stablecoins, which have seen strong momentum recently, particularly in 2025, but these are actually, we have to say that still face regulatory and adoption challenges, right? So that's the landscape we are working with. If we move forward, and we are going to see in the next slide, which is actually the next evolution, we are going to see that this scheme interlinking, it's something that it's already happening outside of Latin America. But before making these predictions about what's going to happen in Latin America, it's useful to look globally, right? And in Asia Pacific, many of these models are already real. And the region that leads in RTP in real-time payments, especially through RTP interlinking, is APAC, Asia Pacific. So we've seen domestic schemes connected through bilateral and multilateral agreements, Singapore, Thailand, Malaysia, Indonesia, and India's UPI expanding in the region. I mean, this is fragmented, but it already delivers real-time, low-cost cross-border payments at scale. So these models are not just theoretical, right? They are already happening outside Latin America. So if we want to go deeper, and we are going to get an example of an even more coordinated version of this, is Project Nexus, that we are going to see in the next slide, that this is a project, this is an initiative led by the Bank of International Settlements, the BIS, and the main objective is to connect domestic RTPs through a standardized layer that involves central banks and regulators across the regions, right? So this started particularly in Southeast Asia and expanded to India and has drawn interest from the Eurozone. Here you're going to see like this timeline, that this timeline may shift, but the key point here is the direction, right? There is a concerted global effort to enable instant, low-cost cross-border payments, which is really interesting, actually, where the point is, right? So if we continue, and we're going to see another example that what's happening in APAC, is this cross-border wallet aggregation becoming reality. And we're going to see in the next slide that Asia also shows us what wallet interoperability could look like. And Alipay is the biggest example here, and is evolving into an unified wallet gateway, allowing different travelers, for instance, to use the local wallets in China today. So that's the immediate use case, right? But the broader implication of this is a regional wallet-based cross-border layer, which is really interesting. And this is giving us a concrete example of how wallet integration could scale. Now, we're going to talk about forecast, right? Okay, we are going to see, and we need to start seeing different scenarios about what's going to happen, right? Or what might be possible in the future in Latin America. So if we move forward to the next slide, we're going to see that, okay, based on a lot of studies that we conducted, we use a simple framework to assess which rails can scale. And this is interesting because here we can identify 5 different pillars that are technical capability, regulatory support, bank participation, use case maturity in this case, which is consumer adoption. Sorry, use case maturity on one side, and at the end of the day, consumer adoption, right? So this will help us compare different infrastructures in a very structured way to identify, okay, what are the different scenarios look like for the different cases, right? So if we move forward to the next slide, we're going to see the first argument in favor of stablecoins, right? Because here we are saying that stablecoins mostly likely to reach mid-scale in the short term. So scenario 1, as we said, is stablecoins. From a high-level view, we are going to see that stablecoins are the most likely to reach mid-scale in the short term. And why is this? Because they are already technically ready. They inherently cross-border. They are by nature used to make cross-border payments, and they already have live use cases. So consumer adoption here in Latin America, or particularly here in most of the countries in Latin America, is compared to other regions, we can say that it's strong, right? So we have different cases in different countries in Latin America where actually was really important the use of stable coins for different use cases, whether it's savings, investment. We know the cases of Venezuela, Argentina. But we have like what are the weakest points, right? Where are they weaker? And regulation here in Latin America is still uneven. Bank support, we can say, is limited, and adoption is low compared actually to mainstream payment methods in the region. But here we can say that strong technical readiness and real use cases could allow stablecoins to scale faster actually than expected. We are going to see the next case in the next slide, which is, okay, what is our second argument, right? Wallets can scale and scale cross-border payments fastest because of large consumer bases, bank partnerships, and supportive regulations. And we can see here that this is a second and very reasonable argument, right? If we say that, right? Or we mention these reasons. Because wallets already they benefit from a large existing user base, back partnerships, and this is happening in most of the country, is that we have more favorable regulation, right? So if wallets leverage their scale and they partner with the global rails, like, I don't know, card networks or closed loop systems, they could build effective cross-border networks very quickly. So if you as a company prioritize consumer reach, partnerships, and regulatory readiness, wallets could be the first to scale. Now, if we go to the last argument, I mean, we talk about the third argument. Here we need to talk about what's going on, or what's going to happen, or what can happen with domestic RTPs interlinking, right? Here, this one is about mostly massive scale or mass scale, right? Not just mid scale. We already seen like mass adoption domestically, particularly in Brazil, and Colombia is following fast. And this model has a really strong regulatory backing and crucially fully bank support. This is the strong pillar of this argument. And it supports this argument about how domestic RTP can scale fast. Also, we have new standards in the cross-border payment industry that expand also, and central banks pushing national agendas using like PIX-like models, right? Like, and considering this, RTP definitely can RTP interlinking can definitely scale rapidly across the region, considering these factors. Now, just to summarize, we move forward to the next slide. We can close and we can say that, okay, this framework, as I mentioned a couple of minutes ago, isn't about picking a winner. It's about understanding actually what needs to happen for each rail to scale. So we are not picking a winner. We are not saying, oh, okay, this is definitely going to get all the volume in cross-border payments, but we need to understand what needs to happen, right, for each rail to scale. So for stablecoins, we're going to say that bank adoption and explicit regulatory support are key. For wallets, we have to say strong partnership with also banks and global networks and different schemes, right, supporting that. And for RTP interlinking, I think that, and we think that central bank alignment is a must, and of course interoperability and interconnectivity to allow the different systems to make cross-border payments like among each other, right? So the real question here is, okay, which of these is most likely to happen first, right? So the next thing that we have is we have a poll. So you can guys have fun here. So we can go for it. And this is going to be the next thing.
All right, thank you, Mika. Yeah, guys, so please take a moment to make your best guess. Which cross border rail will scale most quickly across Latin America? Again, it's not a question of which is going to win, which is going to be the singular solution. It's really about which one is going to move fastest and move first, and which one, therefore, which one might I want to prioritize in my own strategic planning. Okay. Okay, we have some very even results. I'm curious as to how this is going to play out finally. You know, I did a similar exercise at CrossTech. Many of you may have attended the CrossTech event in Miami last fall, and the audience was very heavily skewed in one direction. I'm seeing a little bit more even results right now, so we'll just give it maybe 5 more seconds, get everyone's votes in. Go ahead. All right, let's go ahead and share that. So, Mika, do you want to speak to the results for our audience?
Yeah, so okay, we have a very interesting tie here with a stablecoin and wallet integration, both 41%, and then domestic RTPs interlinking with 19%. So it's really interesting how stablecoin and wallets are are gonna be top, right? Or at least for this audience, they're gonna be like top rails in the next
That's really,
season
I
of
love to
cross-border
see those
payments.
results. So with the exact same distribution between stablecoin and wallet. Now, when at the CrossTech event, it's specifically cross border, so it's only cross border professionals, and that might make them a little bit more inclined towards stablecoin. I think in this audience, it's a little bit more evenly spread around payments overall, and so that might help explain the very even distribution here. So that's really fantastic. Thanks everyone for your participation there, and thank you, Mika. So if we go to the next slide, that is where we ask you to make your prediction. And so, what is PCMI's prediction? Right, this is our best prediction based on the tools that we have available to us. We would of course do a very robust, detailed, rigorous, and methodologically sound analysis if we were to do anything like this for your company. But based on the information and the studies that we've done, if we go ahead, PCMI's prediction is actually that stablecoin is the first argument is the one that we think is most likely, that stablecoin in Latin America is most likely to reach mid-scale in the short term, more likely than the other scenarios that we propose. Why is this? Now, there may be many naysayers and those who really disagree with this, and those arguments are valid. Why would we place our bets here? A couple of major reasons. Latin America is already a first adopter of stablecoin. Latin America has the highest stablecoin penetration among users globally and is already more mature than other regions in the world. We have a favorable regulatory environment at the moment with the passing of the Genius Act in the United States, which is whetting the appetite among banks and regulators across Latin America. To achieve the interoperability and the actual central bank and in financial institution alignment required for the other two scenarios, we know that those institutions are notoriously slow, and that may occur probably stablecoin. However, stablecoin players we know are more agile and are going to move faster. And we already have a lot of movement and a lot of traction in the region. And someone just put in the chat, why not stablecoins with wallets? Absolutely. These are not mutually exclusive. Stablecoins helping to promote interconnectivity between wallets is absolutely a possibility. So thank you everyone for your participation there. A little fun exercise to help you. Really, the purpose of this is to give you a framework to help, again, clarify your thinking and make sound predictions and investments that you feel really comfortable with. Okay. So in our last few minutes, just a couple of yes, before I move on from stablecoin, just a couple of quick recommendations based on our prediction that stablecoin is going to move the fastest. Here are a couple connected to the strategy that we've already discussed in cross-border payments. If we're going to start with, if your company has not yet even broached stablecoin, you're still sitting here thinking, okay, how do I move in a stablecoin fashion? The first question you need to ask yourself is, do stablecoins fit my brand then product led approach? Do I even have business moving into stablecoin based on the users whose needs are trying to meet and my existing brand equity? Is this even something I want to entertain? The answer may be yes, the answer may be no. That's something to really think about first. If the answer is yes, learn, experiment safely, internally, and start figuring out how you're going to do that. If you're already in early stage implementation of stablecoin, you're going to launch your limited scope pilots with your most ideal customer. Again, that slice of that blue ocean, whether it's B2B or P2P, that slice of the blue ocean where your solution is going to powerfully resonate with your customers. You're going to prove your value, reduce your friction, and prepare for scale with your most ideal customer. And then thirdly, if you're already in an advanced or advancing, maturing stablecoin adoption, expand stablecoin, emerge as a leader with leadership messaging, and to expand your brand equity so that you can bring that operational solution to other areas where your brand is really going to resonate, and making sure that you're doing that with leadership messaging. All right. Fantastic. So in our final kind of slide here, as we wrap up, we've delivered a lot to you today. We want to wrap it up. Basically, our job as consultants is to help you identify the questions you need to answer, right? And the question essentially is, what is the best strategy? What is the best set of moves for me to hit my growth targets? All right. And so just to start off, based on these things that we've discussed today, if we can bring that up on the slide, right? Are we positioned to grow in an industry that's not growing? Do we realize the industry is not growing? And does our strategy match that context? Can I clearly defend my competitive advantage and forget about competitive advantage, my brand differentiation? Do I have a powerful brand storytelling? Am I targeting customers that resonate with the brand equity I currently have and the operational strengths that I have? Okay. We go into measure, right? Do I have visibility into the true cost and speed of my rails? Am I benchmarking cross-border flows versus actual rail growth potential? Am I really looking at the framework that we just presented to make smart predictions? Do we know which use cases, corridors, rails are growing and how those match with our capabilities? Are we actively measuring that? And on the protect side, protection is about protecting from competitors as well as, digital disruption. But even before that, I want to be protect from my own bad decision making. Are my marketing and customer acquisition efforts actually worth it? Is what I'm doing paying off? Am I investing my dollars correctly? Are we managing our brand equity vis-a-vis competitors? Okay. Are we safeguarding our existing consumer trust and brand equity as we grow into new unfamiliar territory? Okay. So just a few ideas here to help you stay on track and make sure that your strategy is very literally and well connected to your KPIs and the goals that you individually have in your role as well as the overarching company. Okay. So we're just about out of time. We are going to stay on a few more minutes to answer. We have several questions. So if you can stay on, hang with us for a few more minutes, that would be terrific. I just want to close by mentioning to you all that at PCMI, our mission is to be more committed to your success than any other consultancy you could possibly work with. Another way of saying that is that when we work with clients, we make them look good. We help them get to their goals faster. We help them reach their KPIs faster. We help them excel and accelerate in their careers. And if you start bringing this level of framework and discussion to your CEO, to your chief revenue officer, to your CMO, imagine the level of inspiration and the higher level of conversation you're going to start having with your internal stakeholders. So that's what we really want to transmit to you guys today. And before we get to the Q&A, a final poll. We would love to connect with you. If you want to dive into any of the questions or the frameworks or the data or the insights that we discussed today, please go ahead and let us know. We can schedule a call right away in the next week or so. We can wait until Q2 when you've kind of digested things and you're ready to make some kind of move. We'd love to give you that space. Whether or not you have something concrete in mind, we just want to get to know you and hear how you're reacting to the content. So take a moment if you would like, give us that indication and we'll be sure to follow up. Just leave that on for another 5 or 10 seconds and yeah, we can go ahead and close that. Thank you very, very much. Annabelle, we still have our audience with us, so we'll take a couple questions if you want to come back. And let's just take, since we're over time, just take a couple, and we can follow up with folks offline as well.
Absolutely. So starting us off, we have one from an attendee that's anonymous, but the inquiry is acquiring new customers isn't only about attracting new customers, it's also about winning business from competitors. Why isn't this considered a valid growth opportunity in P2P?
Okay, terrific question. Thank you. Yes, I actually had a similar conversation with someone earlier this week. Um, saying, look, our goal is to, there may not be more remittance customers joining the market, but, we want to compete and we want to take customers away from our competitors. Of course, this is what a lot of folks do. And it's not to say that it's not valid. It's just a low level of participation in the market. Okay. As Marina explained, what can you really do to steal customers? You can buy them, you can provide incentives, you can try to improve your user experience to make it more appealing. You can do massive marketing campaigns, but you're going to get users who are essentially unloyal. And believe me, your competitors are going to buy them right back. It's a revolving door. And this is what a lot of companies do, and it works, for a lot of companies, but there is probably a higher level, more intentional growth strategy that you can develop, maybe in parallel, to give you a little bit more cushion beyond this very, war of attrition type of competitive strategy.
All right. So we have a question now that revolves around CBDCs, and this is from Mitchell. So he's asking us, from your standpoint, how might the accelerated adoption of central bank digital currencies, CBDCs, as promoted by the BIS and global central banks, structurally reshape and potentially redefine the adoption trajectory of crypto assets within the cross-border payments ecosystem?
Okay, I can go for this one. Thank you. Thank you. Is Michelle right? Okay,
Mitchell.
yes, for this. Well, I think this is really interesting, and I'm happy that you bring that up. Actually, to be honest, because what I think from my perspective is that this accelerated adoption or the adoption of CBDCs in the future, from my perspective, this is like a double-edged sword, right? For the crypto ecosystem. Because on one side, you have a positive thing that it's structurally, it 100% validates the underlying technology, which is DLT technology, blockchain. Um, and this definitely accelerates the move away from legacy systems, right? For the use of blockchain technologies and this underlying infrastructure. So this will definitely accelerate adoption. But on the other side, I think that this will redefine the trajectory by, I think, shifting on somehow the focus from decentralization or decentralization to a more regulated interoperability or a regulated decentralization. So I think that what will dominate high volume institutional flows is CBDCs and regulated stablecoins, and this definitely will create like a bifurcation, right? Because we will have like CBDCs and regulated stablecoins on one side that, on my perspective, it will become the standard for payments, right? But we are gonna have like other crypto assets and other stablecoins that are not regulated. That I think that this will be definitely relegated to another niche roles, like primarily as speculative assets, collateral in DeFi, or another like kind of censorship resistant alternatives outside of this formal perspective, right? Outside of this formal perimeter. So I think that's what's actually going to happen, and this is something that is very interesting to see what's how this will drive future adoption in the crypto ecosystem and stablecoin ecosystem.
All right, thanks, Miha. So we have one final one I think we can get into that is referring to P2P. The P2P market is basically, the question is asking, in a flat growth market, some remittance companies will begin losing money and may want to exit or look for a lifeline. In that kind of an environment, would it make sense for new entrants or large players to buy P2P market share via acquisition?
Cool. Yeah, that's a great question. Certainly. So, what I would say, the answer is yes. Certainly, that's something to be evaluating and looking for opportunities there. What I would say is we need to evaluate why is that company losing money and what is your plan to stabilize that trajectory, knowing that this is not a growing market. So, do you want to make an acquisition in a non-growing market? It may not. That's a question I would take on a case by case basis. We need to think about, am I buying the technical capability and I'm going to bring my own users to use that technical capability and that's how I'm going to get growth? Or am I bringing my brand and my capabilities to that existing user base? Right? Those are kind of two ways that you might approach that acquisition. So we just need to think really strategically about, why am I making this acquisition in a flat market, and what is my plan to reinvigorate growth?
And Lindsay, if I just may add, I think one good example was Western Union and Intermex, right? They announced it last year, because Intermex, for example, is a US-based company, remittance company, but they are really strong in Latin America. And Western Union, the intention is really to be more strong in this corridor. So it's one of the strategies. So as you said, yes, but it depends on the case. Just one example to make it clear.
Absolutely, it was a good fit. Exact that would expand capabilities 100%.
All right. So one last one, and I think we'll be able to wrap it up. So this question is focused on speed, and it's asking, well, basically says, everyone seems to be trying to compete on speed. Is this really the right competitive lever? And what other features are moving the needle?
I love this question. Thank you. You really hit it on the needle. It's kind of a bit 3 years ago to be talking about speed. Speed is now a prerequisite. Unless we're talking about very large transactions, I'm talking, in the tens of thousands or millions of dollars. I'm sorry, hundreds of thousands or millions of dollars. Speed is already solved for. So what's the additional value I'm bringing beyond speed? As you get into larger transaction values, the question is speed really that important? Is security or visibility, or are those things more important? On the more retail side, the ability to self send a transaction, right? Do I have a digital interface where I can easily dispatch payments without having to call my bank and fill out an Excel and manually do a host to host type of interaction? Do I actually have a digital experience that facilitates and saves me time? It's not so much the transfer speed, but the entire speed of the operational process is just one example of something that is possibly more powerful than speed. Mija and Marina, I don't know if you have anything to add. You guys, we've all done a lot of cross-border work recently, so if you have anything else to complement.
I 100% agree with what you said, Lindsay. I think the other thing that it's not all solved, but it's also really important is the user experience, right? How easy it is. As I said, being able to track the transaction, but how easy it is to input the data, to send the transfer, as you mentioned. This is something that always appears in all the studies and surveys that we're doing.
Absolutely. All right.
All right. Well, I think that does it for our questions. So I think we can probably wrap things up. Lindsay, I'll throw it to you.
Thank you, everyone, for hanging in there with us, for tuning in today. We hope that this was interesting and valuable to you, and we would love to. We'll be following up with those of you who indicated we'd love to have these conversations, and also hear from you. Where are you seeing this industry going? What maybe did we miss that you would like to add to this type of analysis? And we can't wait to have some future conversations with you. So thank you very, very much, and we'll be in touch soon.